Good morning, it's Harvey Jackson. Just going to go through canola S&D or canola supply and demand estimates, and again, estimates because there is no reporting until December 6th, I think it is, but just have a quick look at it here. I've got a spreadsheet that's working document with, of course, a lot of numbers that are always getting changed by StatsCan, but what I did here, and I'm just going to highlight, I guess, is the what the 2025 estimate could be, at 42.3, and that's the high yield that we saw back in 2016-17 crop year. And if that's the highest number that we've ever gotten to, and we get back to it, still below a ton an acre, that would put our production at 20 million, and that's what I'm going to show in next slides here. But if we were to get to basically a ton an acre, we would end up with a carryout at 5.663, and I believe that's going to be like a 28.3% carryout, and that's pretty brutal. But what my numbers are going to show on the next slides are going to be the 42, the same as our high yield that we saw in 2016. So production-wise, our acres are slightly down from last year. It's going to put us at 20.552 if that were to be the number that we do achieve this year at 42 bushels the acre. That is actually going to put us at an all-time high of carryout. And again, that's assuming a 12.5 million metric ton export and a 7 point something export number, 12.5 crush. Sorry. Stocks of use is still going to be pretty high. Ending stocks, that's putting us at 4.7, and if we were to get to 40 or a ton an acre, we're going to be 5.5 million metric ton carryout. We need some demand, one way or another, in the oil side or in the seed side. I think there's going to be some shifting in the marketplace, but it's going to be difficult to be able to make up those differences that we've already seen. Soybeans hold at near a 3-week high on expectations of lower yields. This goes along the theme that I've been talking about for the last few days. Without USDA reports and our absence of any reports from even in the StatsCan, the sentiment kind of goes bullish, right? Because it's going to talk about, hey, lower yields than expected from the USDA, and it's until the numbers come from the USDA that we get solid estimates, and we use that number as our base. But now without a base that's coming out often, where it's going to be market sentiment. Market sentiment is always trying to make the market a little bit more bullish. Here's another bearish news on wheat, and as most row crop or cereal production. 17-year high of European cereal forecasts going up. So not a good story, but it's constantly, nobody really had a problem with any production this year. And that's showing with the market values that we're seeing. Band of moisture, Saskatchewan and Manitoba. Maybe leave some of those wet areas that are already wet absent from getting moisture. Maybe they can get some corn harvest done there. Very little on the radar. Here we are just looking at some of the weather, and you can see that that's snow. And looks like it's going to get snow maybe twice in a week here in Saskatchewan and western Manitoba. I don't have my snow tires on, but maybe I should have. Oil seeds. So this is just going to, we're just looking at a comparison from last year to this year, and I just highlighted the difference in prices. So we're looking at 2024. The price was at 640, and today we're at 617. And you can see where we were versus the green. We did have higher prices, and it's retreated from there for sure. Look more like a seasonal kind of tendency. And the other thing I was chatting with a couple of producers about is the carry in the market, and you can see the spread between November of 26 and then November of 25. And this is basically just fallen off a cliff basically since October into August. And August into right now we're seeing a 40 up to close to $50 difference between the markets. So $50 higher for next year than it is right now. And it was at inverse for a little wee bit, and then it's creeped higher. Here's a 1 hour chart, just kind of looking back at basically, you can say a month and a half, and it just it looks a lot busier, but at the same time, it's giving us some ideas where the market breaks out here. So here's just a regular day chart, and it looks like we're just actually just chopping away in this market, in that downward trend in that channel. European rapeseed kind of chopping away in this channel as well, but it's actually trading through almost a lot of the lower moving averages and trying to get to the top end of that channel. Here's your price differential. It's right now European rapeseed and canola is $149 differential, and this is what it was last year when we were 180 to 200. Not to say that we need to get a whole lot higher, but we will need to find some more markets, and this will allow that for sure. Soybean oil still in this downward kind of a trend here, but we'll see if it's going to break out of that channel as well. Soybean, same idea, but it's at the top end of this channel. Your palm oil, it's actually at some pretty good values, and it actually keeps on wanting to creep out. Look at the last 3 days, a lot of green. Crude oil, it can stay in the bottom as far as I'm concerned, but OPEC is definitely keeping the pressure on that, and it's not allowing the whole industrial profitability of renewable fuel if this can stay in these low 60s. Canadian dollar, kind of going sideways here, so if there's any dollar plays, I'm maybe a little bit uncertain. I do think that we could actually get down to that 71.8 possibility there. U.S. dollar index just keeps on creeping higher. And it looks like we could be getting back into this direction of $100 index on the US dollar. Let's have a quick look at wheat here. I put this into an hour chart again, and this is basically the beginning of July and downward. Don't really need to show that kind of time, but here Kansas, just that downward slope. Same thing with Chicago. And your milling wheat looks like it's kind of flattening out. Harvest is over a little bit earlier there, but it's still got some pressure on it. And if there's a cereal that's got some potential here, it looks like corn could break out. But any confirmation of bigger yields or slowing down supply, that would be an issue. But it kind of feels like it's going to have that positive sentiment because of lack of news as well. Smaller yield. Oat markets. I haven't showed this for a while, but it's just on that slide. Live cattle. Looks like we're going to try to make a triple top here. and your feeder cattle are breaking out as well. Lean hogs have not kept up, but still at the top end of this range here. It's pretty robust pricing. And that's all I have for you today. No US or USDA crop production report that I can see.